My name is Jesse Durham, and we're here today to talk about capitalization. Normally, capitalization has some different meanings, so we will get very specific to how it concerns becoming your own banker, practicing the infinite banking concept as R. Nelson Nash described in his book. In a tactical situation, it could be said that or implied that in an opportune moment, we need to capitalize on our enemy's unawareness, or some example of that nature. In sports, take advantage of, take a chance to gain an opportunity, to capitalize on a moment in time, perhaps. So I'm obviously also not going to be talking about the capitalization of letters in writing, specifically in the infinite banking concept, because I know that it's common, having heard, having thought even these things myself and worked through the process of what it means to capitalize and get a little more awareness of other areas in life where we don't even question what we're capitalizing, why we're capitalizing, how we're capitalizing. It's something to be worked through to realize specifically what capitalization means in becoming your own banker. Because commonly, folks will say, well, I like the idea, but I don't want to lose money to get started. I'm going to lose money to get started. They'll use terminology like, I'm going to have to invest, and lose money to get it up and going. These are errors, and I want to approach that now. So, let's start by remembering that Nash himself, there's a literal book on how to become your own banker. I know there's a lot of information, misinformation, disinformation, somebody's thought of somebody else's erroneous thought concerning the infinite banking concept. Nash, the inventor, the conceiver of the infinite banking concept, said, don't be afraid to capitalize. But again, we need to talk here about what that means. Well, let's start by saying with banking, capitalizing means a loss of liquidation, or liquidity, a loss of, we will talk about liquidation versus leverage and how one's far superior to the other. It's leverage. Let me go ahead and give you the punchline. Leverage is superior to liquidation. But there will be a loss of liquidity by owning a policy. You pay premiums to the insurance company, and a lot goes into structure, right, to determine how much access you will have to capital based off of a very in-depth conversation of your needs, both now and long range, on how much liquidity you will have access to, even from the very beginning, even immediately. And when I say immediately, I mean within 30 days of owning a policy. You can access the cash value in your policy. You can access the capital. But the capitalization process does also start. So there may be a loss of liquidity in the beginning, but there will not be a loss of value, which is extremely important to recognize. So now let's look at some other areas in life where we don't even naturally question the capitalization phase. Let's begin with vacations. There's so many things that we can cover and we will cover. Let's begin with vacations. There's only a couple of ways to go about paying for a vacation. Either we will borrow somebody else's money, whether that's a credit card or a home equity line of credit on a home, just somebody else's money to be able to go on a vacation, and then we'll be paying for it for months or years, maybe even after the event. And that's a horrible thing to think about. Not saying I haven't done it, not saying either that I haven't learned from the error of that way of thinking or conducting a household. That's one way, using other people's money, paying them interest over months or even years for that experience that we had. Another way would be for us to, and let me say that by doing that, by paying interest and principal to someone else whose money we would have borrowed, we're capitalizing a system and an entity that they own and control. We're capitalizing for them. Or, and my cash is king folks are going to say, I pay cash for X, Y, and Z. And we'll talk about that. That's great. It's awesome. I love it. There's even Nash said, he who has the gold makes the rules. There's the golden rule. Okay. I'm with you. But what I'm saying, and what I would like us to recognize here, is that if you set aside a certain amount of money from your income, your cash flows, gains, profits, however you're remunerated yourself, and you pile that up until it reaches whatever amount you want it to be to facilitate you going on a vacation, you have capitalized. But to go on that vacation, and I don't know what you've capitalized. You might have capitalized a checking account in a bank that you're not a stockholder in. You may have capitalized under your mattress where, it's susceptible to robbery, burning, just other risk, okay? But you have capitalized, and yet to experience the vacation, to procure that experience, you will have to liquidate those funds, that capital, which brings you back down to zero. So there are these two visuals, right? Where here's level, okay? And you borrow money from someone that you systematically pay back with interest, capitalizing their system until you get back to just zero, even. Or you pay cash for things and you save up, set some aside until it reaches what you want, whatever that is, big or small, doesn't matter. You've capitalized, sure, and that's better than going into debt and paying interest to somebody else. And yet you're forfeiting the economic value that could have been added to your capital in the meantime. And to experience that vacation, you get knocked back down to zero to start all over again if you want to be able to do it again. Well, infinite banking, the practice of becoming your own banker, is capitalizing a system, an entity that you own and control. A whole life policy that's been properly structured for the banking purpose with a mutual company that pays a dividend. Okay? Wherein, from day one, you have guaranteed access to capital via policy loans in a known environment. All right. You immediately have a death benefit, which will be a tax-free transfer of wealth to your heirs, your beneficiaries, some organization that you love, whatever you want that to look like for you. Somebody will receive that transfer of tax-free wealth. Okay. And even more. But let's start with those basics. So you can be capitalizing a policy where you immediately have that asset with the death benefit, and yet you can immediately access, and again when I say immediately, I mean within 30 days from that policy being enforced, access the cash value that's in your policy for X, whatever that happens to be, vacation. Let's go to another example. Vehicles. Here's my question, how much of the money that you've spent buying vehicles in the past do you currently have now? What about the interest that you paid? Or didn't? If you paid cash, you forfeited. So see, either in that scenario, you either capitalize somebody else's situation by borrowing other people's money, where you paid their principal back, their capital back, plus interest, capitalizing their system, or you set the money aside to be able to procure your next vehicle and forfeited the economic value that could have been added to your money. And then even then, you get knocked back down to zero. Here's a quick question right there. Let's say on vehicles, it's just a great example. We've bought cars, we're owning cars now one way or another, whether we're leasing and financing, paid cash for it, whatever the case may be. Here we're talking about doing it through your own privatized banking system. Let's say, I love this scenario. Let's say you got a $5,000 vehicle, I got a $5,000 vehicle. You saved up the money to be able to buy yours cash, because cash is king. And that's great. I love it. It's fantastic. It's better than going into debt. And yet, I put $5,000 into a policy that I own and control, and then access the cash value of my policy to be able to procure my vehicle. okay, through a policy loan. So we both start out with $5,000. You just straight up get a vehicle. I fund a policy, access my cash values to buy the vehicle that I want. And even if it were year one, I might would have an inferior vehicle if you used a full $5,000. And I'm trying to create an apples on apples, oranges on oranges scenario here. But again, I'm chasing some rabbit holes too. Even if I had a lesser vehicle, because I had less to work with to buy one, but I still accomplished 2 tasks instead of just one, there's something to be said about that. What happens if the next day, and of course when I finance my vehicle, I make those payments back to myself. If the next day the vehicle breaks down, you would either have lost what you've lost because you paid cash for yours, and you'll just have to find the cash from a cash flow or whatever you have going on to be able to facilitate a repair or a replacement. Whereas I don't get stuck back at zero. See, I do still have my vehicle in whatever condition it is. If it had a breakdown as well, there we are. But I also have that asset that I procured for myself on top of it, wherein my premium dollars continue to grow uninterrupted, even though I access the cash value for procuring this vehicle via a policy loan. So just a neat scenario to be able to consider right there, some of the differences and why it's valuable to capitalize your own privatized banking system. Let's move on. How about college? There are many things that we could say there. I've already done a college video on the channel here. I personally would say that I anticipated that I would go to a 4-year school simply because I was told that that was what I was supposed to do to be able to have success, a good career, etc. And I did not consider the value of 4 years of my life outside of what it was I was trying to pursue in education for a career. Okay? And I paid the student loans for years to come thereafter. See, we don't question dedicating 4 years of our life, wherein, for me, I ended up doing a couple of different things professionally. It was law enforcement first. I was a police officer in North Carolina. Well, for 4 years, I was not receiving income as a police officer, even though that is the trajectory that I was on for 4 years. Okay, so I'll ask you, if you have a college experience, how much were you paid to go to college for that experience, in that profession? Well, you weren't. So I'm just trying to get you to follow my thinking. And there's so many things we could talk about here. Scholarships, grants. I understand. Some people have their way paid to go to school. I get that. But what I'm asking is, did you earn in the profession that you were studying to enter while you were studying to enter? So you might have had a free ride. You might have had a college paid for. You might not have gone into debt there. That's great. But 4 years of your life, what do you trade 4 years of your life for? Okay. So I'm not trying to disregard the value of a college education. I'm just asking some thought-provoking questions about all these different subjects of the money, the time, everything. So we will often see years capitalized to realize, what we hope to be a future gain. Let's talk about an engagement ring. I can remember what a big deal that was for me to get a ring for my wife. And, I know what that looks like. I went into debt for it. It's a horrible thing to be able to say. She owns it, of course. Now I had to pay it off. Interestingly enough, I did do a private loan with my older brother at the time. So that's pretty cool. At least to be able to keep the money in the family. I'm really big on that. That's a big tenet here in this channel is, keeping more of your family money within the family. But there's that. Getting something as simple as, I say simple, I know it's a big deal, but getting an engagement ring. There's a capitalization that takes place right there. What if, and for sure, don't go into debt for an engagement ring, But what if you could buy the engagement ring that you want for your beloved and you could get the money back also? What if you could get the ring and the money back? I'm just saying, it's a beautiful thing. What about a wedding? The wedding itself, parents out there that are paying for their children's weddings. I have a little girl, 2 boys. I'm thinking ahead right now on that subject for my own self. What if we could facilitate the kind of wedding that we want for our children and get the money back? It's a beautiful thing. So there are many things that the masses do not realize that they are capitalizing, and they do. And yet, when we ask about the value of becoming your own banker by capitalizing a policy wherein you do see a loss of liquidity in the beginning until it becomes more and more efficient over time, there's a balking, there's hesitation. There's trepidation about it. We cannot be afraid to capitalize. Nash said, don't be afraid to capitalize. There's no way that we have access to too little money. or too much money. Excuse me, for sure, too little. There's no way that we have access to too much money. There's no way that we have too much money. There's no such thing as having too much money in the bank. That doesn't exist. But it all begins by capitalizing. My business owners, you're going to recognize this. I don't care if it's landscaping and you procure a lawnmower. Well, there's only a certain number of ways that you can procure a lawnmower. If you finance one, you're going to be capitalizing somebody else's entity, somebody else's business. Okay? Paying interest to them that you'll never see again, money that forever leaves you in your business of landscaping, for example. Or you systematically set aside money, which is great, to systematically set aside money and to capitalize your opportunity to buy a vehicle. But again, once you liquidate that capital to be able to procure the vehicle, you do get the vehicle, the lawnmower that you'll be able to use for mowing your lawns, adding clientele to your business. I understand that. I'm not saying don't buy. I mean, there's an actual part in Nash's book about financing equipment. Check that out, business owners. It's 92 pages. It's big print, large illustrations. Becoming your own banker. Do that for yourself. And you could get both. You could control the banking function in your life. You could access your capital without liquidating the asset of a whole life policy that's been properly constructed, and get the lawnmower and get the money back. So there you are in that scenario with, the asset of a whole life policy that has a free transfer, a tax-free transfer of wealth to your beneficiaries, plus the access to the cash values for the lifetime of the policy, wherein you can do X, Y, or Z. Buy that lawnmower, build your business, grow your business, scale your business of landscaping, and recapture the money on your purchases of equipment. It's a beautiful thing. So there are many different scenarios that we can look at wherein we capitalize. Let's now consider the value then of becoming your own banker, capitalizing your own privatized banking system through, whole life policies that you own and control to be able to do whatever X is. See, you cannot have capital that you procure something with, again, any of these examples that we've used, and then turn around and then do what is the inverse, okay? But you certainly can fund a policy that you own and control, which is an asset from there on, tax-free transfer of wealth to your beneficiaries, and use the cash values to procure X, Y, and Z, recapture that, plus the interest back into your privatized banking system, and repeat and grow and scale as you go. So you can see, infinite banking is not an either or question. It's not, should you invest in gold, for example, or Bitcoin or real estate or anything else you want to put in there, businesses, whatever, or do infinite banking. The banking function is taking place regardless. And we are either going to be then, therefore, capitalizing someone else's entity, or we can refuse to abdicate that and re-ascertain the banking function for ourselves, capitalizing our own entity, and then keep doing what it is that we're already doing anyway. Some other great questions when considering, whether to or not to capitalize, a policy that you own and control for your own banking needs, your own needs of finance, is just ask yourself, what do you already have in your life that's an asset? Truly an asset, and different folks have different definitions. If we used Robert Kiyosaki's definition that an asset is something that creates cash flow, there's value in that. So I'll just throw it out there as an example. But also, what are the liabilities in your life? Assets, liabilities. How about ownership? What do you truly own? Do you own your vehicles, or are they financed with some third party whose terms and all these, the red tape, the paperwork, the scrutiny, whatever that is involved in that is what you're subject to. Do you actually own your home? Are you capitalizing somebody else's system? And if you're rent, you just don't jump on that bandwagon. Somebody owns that location. Somebody owns that abode, and you're capitalizing their system if you're renting. So again, we all have to live somewhere. Don't get me wrong. We need transportation to do the things that we're going to do. You can start where you want to start. If you want to start, it's completely up to you. But what I believe is that when people know what's going on, they'll decide what they want to do about it. Okay? So we're all either capitalizing someone else's system or we're capitalizing our own system. And here we're all about becoming your own banker. Becoming your own banker, bringing banking back to the me and the you level, privately contracting for mutually beneficial ventures. Let's not fail to mention either the point of guarantees. When we've considered these scenarios of a college education, pursuing a trade, starting a business, an engagement ring. In any of these situations, what's the guarantee that we'll see a fruitful outcome? Whereas, if we do decide not to abdicate the banking function to someone else, and we decide, okay, I do want to capitalize a system, but my own, I want to capitalize an entity that I own and control and have a system in place where I receive all the benefits of capitalizing an entity, an asset. What are the guarantees? Otherwise, well, you could spend 4 years, as many have done, pursuing a college education and degree to not even end up in that field. And I'm not disregarding completely the value of furthered education, but again, let's be practical and pragmatic here. 4 years, there's nothing more valuable than time itself. Can't get more of that. And yet, we will do that often. We'll capitalize, some opportunity, college for example, and yet we have no guarantee that we'll end up along a path where we enjoy a profession or a career because of having dedicated those 4 years and money. I had student loan debt along the way. Whereas with a policy, it's a unilateral contract. We certainly have guarantees of a death benefit, access to cash value, and more. So that's guarantees. It's a beautiful thing. So again, I've shared that I've had these thoughts come up before. And remember, Nash said, rethink your thinking. So even when these thoughts have come to me along my journey over the past several years, from being, a customer to now a professional coach, licensed agent, my wife as well, where we teach people how to become your own banker. Anytime that thought comes into my mind of, well, but I'm having to see this loss of liquidity, when I start a brand new policy, for example. That's true. But again, I would much rather And I'm very excited to capitalize my own assets, my own banking system, rather than someone else's, because those are the options. Either we capitalize somebody else's system or we capitalize our own system. I'd much rather capitalize my own system than anybody else's. So I hope this has been helpful for those of you that already have policies, your clients. I hope that this has been helpful. If you'd like me to dive deeper on any particular point here, please let me know. Also, if you're vetting this idea for yourself, the concept of capitalization, capitalizing your own policies, it will come about. So I hope that this has been helpful for you on your journey of vetting the idea, performing your due diligence on finding out what exactly is this infinite banking concept. But if we could have a personal conversation that would be beneficial to you, let us know. A webinar, in-person meeting, be happy to schedule something. You can email durhamtalents@gmail.com, or you can call 828-817-4223. This has been an absolute pleasure for me. I look forward to our next conversation. Have a great day. Take care.